Good morning, friends. Good morning, friends. Okay, let's continue with our discussion on standard costing. In the last session, we are done with labor variances. I'll quickly first discuss the homework questions and then I get into overhead variances. 12 we did in class, 13 was done, 14 is a okay, 14 is a homework. Here, the standard labor employment and the actual labor engaged in a 40-hour week for a job are as under. So 40 into 100, 40 into 100, 4000 hours equal to 2000 units is the standard equation. 4000 hours equal to 2000 units is the standard equation. ST equal to AO is 1800, ST will be 3600. Any doubts on 14? You will get standard time as 3600. Split that in the ratio of 65, 20 and 15. Actual time is 40 into 50, 40 into 30, 40 into 20. Split in the ratio of 65, 20, 15 is the RSH. Any doubts on this? Clear? 15 we did. 15 homework. Okay, 15 is homework. A company plan to produce 2000 units of a product by employing 40 hours into 65 people. So the standard equation is very simple. 2000 units equal to 2600 hours. 2000 units is equal to 2600 hours. 1800 units equal to question mark. That will give you the standard time. Actual hours worked and actual hours paid as a small difference. Worked is 50 into 40. That is, sorry, paid is 50 into 40. Worked is in this 100 hours you are losing. In this 100 hours you are losing. This is a single labor, no multiple labor scenario. So 2000 is the AHP, 1900 is the AHW, RSH is 2340, SR is directly given, AR is directly given. Any doubts on this? Yep. 16 is on both material variances and labor variances. Both are single material situation and single labor situation. When it comes to material variance, 350 is the standard price, 365 is the actual price. 350 is the standard price and 365 is the actual price. In actual price, you will have to do that bifurcation. Something come from opening stock, something come from current year purchases, because there is an opening stock of 5000 kg at the beginning of the month. These 5000 kg would ideally be valued at 350 rupees. Would ideally be valued at 350 rupees, assuming I am following the FIFO method of issue. Assuming I am following the FIFO method of issue, the 5000 kg of opening raw material will be at 350. From the current year purchases, whatever we have consumed, that will be at 365. Your SP is 350, AP 365 for few units, 350 for few units. AQ is there saying 7200 more than budgeted quantity. What is budgeted quantities? Standard quantity is calculated with the help of actual output. Budgeted quantity is calculated with the help of budgeted output. So BQ is equal to BO into input by output. Budgeted output into input by output. Budgeted output in this question is 1000. The budget and actual is same. 1000. If the budgeted production and actual production is same, indirectly budgeted quantity and standard quantity is also same. Standard quantity is calculated with the help of actual output. Budgeted quantity is calculated with the help of budgeted output. In case you are going to say BO and AO is same, which indirectly means SQ and BQ is also same. Standard quantity is 1000 into 30 by 1, 30,000. Budgeted quantity is also 30,000. Actual quantity is 37,200. In that 37,200, to me the solution is wrong. I don't know, maybe ICI has followed this. 30,000 plus 7,000, no, 37,200 is right. This 365 is wrong. Why? I'll explain. Wait. 30,000 is the standard quantity. Another 7,200 we have used. So 37,200. Any doubts on 37,200 first? Any doubts on 37,200? 365 should not be for all 37,200. There is a opening stock of 5,000 at the beginning of the month. This is similar to third question we did in material variance, where we had opening stock, purchase and closing stock. Opening stock was valued at standard price, purchase was valued at actual price. That is what we did. So ideally in this 37,200 I should split into two. From opening stock, from current year purchase. I hope you remember this. We had done this in one of the. So whatever is the balance, I have opening stock 5,000. Current year purchase I can calculate if I want. What is current year purchases? Consumption is equal to opening stock plus purchase minus closing stock. Consumption is 37,200. Opening stock is 5,000. Purchase is balancing figure. Closing stock is 10,000. I don't need purchase as such. I don't need purchase because I can calculate if I want. Basic thing is, of the 37,200, 5,000 came from the opening stock. That should ideally be valued at 350. This is the problem I'm talking about. In this problem, quantity consumed from opening stock from current year purchase. Opening stock was valued at standard price. Current year purchase was valued at actual price. We have done this in question number 3. Ideally, the same should have been repeated here. I don't know why they have not done. Uh, to me, the solution is wrong. I'll change the solution. I'm not okay with this. I'll change the solution as far as the price variance part is concerned. Ideal answer is, you can change it as 350 into 5,000 plus 365 into 32,200. Of the 37,200, 5,000 units have come from the opening stock, which is at 350. Balance have come from current year purchase. I don't know the current year purchase also. I don't want to know. I can calculate, but I don't want. Balance will come from current year purchase. That is a very simple logic. That will be at 365. The only logic of taking 37,200 all at 365, if you assume the opening raw material was also purchased at 365 in the last month. The opening raw material was purchased at 365 in the last month. I don't see that to be more logical one. Clear? Any doubts on the material part? Any doubts on the material variance? Labor variance is fairly simple. Standard equation is 5 hours is equal to 1 unit. AO is 1000, so standard time is 5000. Standard rate is 80. Actual rate into actual hours is 434,600. Actual hours is 5,300. Any doubts on this? There's nothing for me to discuss in labor. I have not written the breakup here. Many a times I write it directly. Sometimes the question will specifically ask us to compute, so we write the breakup. Any doubts? 17 we did. 18. Okay, 18, I think it is similar to one another question we did. The first question we did, where we had this 5% of the time paid being lost due to abnormal. There was a rework which you did. It is similar to that question. That rework is what this question is all about. Here the standard equation is 20 units equal to 120 hours. 20 units is equal to 120 hours. We have produced 1000 units, which will be 6,000 hours. Standard rate is 25. Actual rate is 25.6. Actual hours is 48 hours into 120. Actual hours paid is 48 into 120. Worked is deduct 5%. Deduct 5%. Any doubts on this? 19 did we do? Okay. 19 is also almost a similar question. Here it is with the with idle time. SR is this, AR is this. SR and AR you copy paste. Actual hours paid is 40 hours into 13 people, 40 hours into 4 people, 40 hours into 3 people. Actual hours worked is 38. Why 38? Because 2 hours were lost due to abnormal idle time. So 38 into 4, 38, so 38 into 13, 38 into 4, 38 into 3. Total of this in the ratio of 10 is to 5 is to 5 is called as HW. Total in the ratio of 10 is to 5 is to 5. You will have to split in the ratio of 10 is to 5 is to 5. And standard time, when it comes to standard time, it's very simple. The question says 1000 units in 40 hours with 20 people. So 800 hours is equal to 1000 units. Question mark is equal to 960. You get it, and split in the ratio of 10 is to 5 is to 5. Any doubts? Clear? 20, this used to be part of an area which you would have learnt earlier, not here. In the old syllabus, there's something called as contract costing which was there. The contract costing part is not tested here. It's only the variance calculation. I don't know, I could have removed this question altogether because you have standard quantity directly in the question, standard price directly in the question, actual quantity directly in the question, actual price directly in the question. You just need to apply and get the answer. No calculation needed. SP is available, SQ is available, AP is available, AQ is available. No need to even do RSQ calculation because it is not asked for mix and yield variance. Similarly, SR is available, SH is available, AR is available, AH is available. No need to do your RSH. No need to do RSH. So not required. I have not done. Everything else is directly available. It is directly available in the question. Did we do 21? Okay. 22 done. 23. Okay, 23 is homework, but here the standard time is 1800 hours, which is directly given. Split that in the ratio of 32 is to 12 is to 6. 32 is to 12 is to 6. That is the standard time. Actual time is 40 into 28 into 18 into 4. Total of this in the ratio of 32, 12 and 6 is RSH. Total of this in the ratio of 32, 12 and 6 is RSH. SR, AR directly available in the question. 3, 2, 1 and 4, 3, 2. Any doubts? 24, the question has asked for material price and usage variance, labor rate and efficiency variance. It is multiple material problem, but I'll not do RSQ calculation. I'll not do the RSQ calculation. Can I do it? Yes, you can do it. It will take you a little bit extra time, that's all. But RSQ is technically not needed. In fact, sometimes what you can even do is you can ignore this also. In the table, you can ignore SP into RSQ. If a question is not asking for mix and yield variance, you can use the table which you use for single material. You can use the same table which you use for single material. That's your wish. I would prefer you to use that table directly itself. Single material table. In the solution, I have not done that because sometimes you will get confused. But you can even use the table which you use for single material, because single material can give you material cost, material price, material usage. Multiple material can give you mix and yield. So in this question, if you ignore this, if you remove the second table, what is seen as the single material table? What is seen as the single material table? In that, SP directly available, AP directly available, AQ directly available. SQ is something what you need to do 6000 units into 2 by 1, 3 by 1, 15 by 1. Input output ratio is there in the standard cost card. I've always told you standard cost card will give you the equation very easily. Are the standard equation are the input output ratio. So the input output ratio for material A 2 is to 1. Material B 3 is to 1. Material C 15 is to 1. If you add all the 3 and do that is overall, then you'll have to split in the ratio of 2 is to 3 is to 15, which I don't want to do. I don't want to do the splitting part again. I can directly write this number 2 is to 1, 3 is to 1 and 15 is to 1. Clear? Any doubts on this? Then the next part they've asked for labor variances. SR 8 per hour. SH is 1 unit is equal to 3 hours, 6000 unit equal to question mark. 1 unit is equal to 3 hours, 6000 unit equal to question mark. Actual hours is 17,500. In that 17,500, 2,500 hours into 12 and balance 15,000 hours into 8. The rate is two different rate. The rate is two different. 2,500 hours have been paid at the rate of 12 and 15,000 hours have been paid at the rate of standard rate, which is 8. Any doubts on this? And you will understand, you will appreciate this only if you do homework and come. Otherwise, it may not add much value. I can't help it. 25 we did, no? 26. Okay, I'll now move to the overhead variances. Go to the theory note. Variable overhead variances. Variable overhead variances. Now, in the overheads chapter, listen for some time. In the overheads chapter, we learnt that overheads are absorbed using a suitable base. In the suitable base, we had multiple items. We had something called as direct labor hours, we had machine hours, output used, direct material cost, direct labor cost, and prime cost. When it comes to standard costing, our assumption is that overheads are driven by direct labor hours. If something else is there in the question, they can give something different. Listen for some time and then you write it. You just give the heading variable overhead variances. Listen for some time. SR, AR, SH, AH. Our table is like this: SR into SH, SR into AH, AR into AH. We don't have anything beyond this, and there are no different situations. Only one situation is there: SR into SH, SR into AH, AR into AH. This SH means standard labor hours. Sometimes it can mean standard machine hours also. Sometimes instead of hours, it can be anything else also. It can be anything else also. For example, suddenly it can say, I want to do standard labor cost. I want to do standard material cost. I want to do standard prime cost. You can have any basis. Most of our problems has only labor as basis. So SR into SH, SR into AH, AR into AH. I'll give you time to write. Listen for some time. There are certain conversion factors and all which I'll have to explain. This part is called expenditure variance. We don't use the word rate, and this is called efficiency variance. Same as you are there, it was called rate and efficiency. Here it's called expenditure and efficiency. This SH and AH will be copy pasted from labor variances. Whatever you do in labor variance calculation, same SH and AH you are going to copy paste here, or you are going to calculate here. Whether either you have to copy paste, for example, some question like you did material and labor variance together. There are, I think, 5-6 problems which we'll do in the next session where we'll do material, labor, variable overhead, fixed, all the 4 variances together in one question. When we do that way, from the labor I'll copy paste the SH and AH. From the labor variances I'll copy paste the standard time and actual time. Now in variable overhead, I do not have situation like multiple variable overhead, mix variance, all that is not there. Also we do not have concept of idle time. There what happens is this AH means AHW. It can't be AHP. It can't be AHP. If workers are not working, no power cost incurred. Electricity cost is an example of a variable overhead. You will not incur power cost if workers are not working. That's all. There's no concept of a idle time bringing here. So here we have only one situation. I do not have 4 situations or 2 situations. Can you tell me what is the formula for variable overhead efficiency variance? Look at the chart. SR into SH minus SR into AH, variable overhead expenditure variance. SR into AH minus AR into AH. Together is called VOH cost variance. Together is called VOH cost variance. Wait for some time. This SR into SH has an another name. It is called SR into AO. Logic is very simple. Actual output is always used to calculate standard time. Actual output is always used to calculate standard time. So you can replace SR into SH with SR into AO. You can replace SR into SH with SR into AO. For example, coming to this question, 120, this is labor variance discussion, okay. 120 was standard rate, 120 was standard rate, but we can have two types of standard rate. One is called standard rate per hour, which is what you will use in labor, but there can also be a standard rate per unit. What is per unit is, for every unit you will incur 600 rupees labor cost. For every unit you will incur 600 rupees labor cost. SR per hour is 120. SR per unit is 600 rupees. Instead of using this 120 into 2075, I could have done SR into AO also. I could have done SR into AO. If you are using output, you will have to use 600 rupees. You will have to use 600 rupees. Why 600? There can be two types of SR. SR per hour, SR per unit. Per hour is 120. Per unit is 600 into 415. Can you tell me what is 600 into 415? 600 into 415, which is what this number is. Which is what this number is. In short, in labor variances, you can remove this calculation if you want in few question, not always. In few question, if you can get SR per unit directly, you can end up using SR per unit into actual output. You calculate standard time with the help of actual output. So SR into SH. Why I did not discuss in labor? Because in labor you have multiple labor and all. There this conversion and all is not possible. But in a single labor I can do conversion and all. When I have multiple labor, this conversion and all you will get stuck. But when it comes to variable overhead, I don't have this confusion of single variable overhead, multiple variable overhead. There many problems, SR into SH will not be possible itself. There you will have to use SR into AO. They may not give some information for us to calculate. Our few question SR into AO will not be possible. Only SR into SH will be possible. So SR into SH can otherwise be called as SR into AO. SR into AH can otherwise be called as SR into SO. Always one actual and one standard will be linked together. Actual output, standard time. Actual hours, standard output. What is standard output is how much you should have produced in the actual time you have worked. How much you should have produced in the actual time you have worked. Today, I am taking class for 2.5 hours. I have solved 4 sums. That 4 sums solved is called actual work. But in this 2.5 hours, I should have completed 6 sums. That is called standard output. My output should have been 6 sums, but I've given an output of only 4 sums. So standard output is what I should have got for the amount of time I have spent. AR into AH is nothing but actual variable overhead. This is not any conversion and all, because everywhere I said AP into AQ, you can write actual material cost directly. AR into H, actual labor cost directly. First put the chart and this conversion factor. Just write this alone. Chart, computation table with the conversion factors. SR into SH or SR into AO, all that you write. Write this, I'll be back in a minute. You've written till this. Okay, now below this, right? VOH cost variance equal to, I'll explain the conversion factor in some time. VOH cost variance is equal to smallest rectangle minus the biggest one, SR into SH minus AR into AH. See, in the formula, we will write this only. Calculation can be SR into SH or AO into SR. That's your wish. You can calculate that column using your wish. Whichever approach works well. Split into VOH expenditure variance, VOH efficiency variance. Look at the chart and tell me the formula for expenditure. What is the formula for expenditure variance? SR into AH minus AR into AH. Efficiency is SR into SH, SR into AH, SR into SH minus SR into AH. Clear? Any doubts on this? Now below this, right, note point number A, SR per hour is equal to SR per hour is equal to, we're going to use the formula which we used in overage chapter, budgeted overage by budgeted suitable base. That is how your OAR is calculated. So budgeted variable overhead divided by budgeted hours. Budgeted variable overhead divided by budgeted hours. SR per unit is equal to budgeted variable overhead divided by budgeted output. If you divide by number of hours, you will get SR per hour, and if you divide by number of units, you will get SR per unit. SR per hour will be used with SH and AH in computation table. SH and AH in computation table. In our computation table, I have used SR into SH and SR into AO. Both SR is not same, okay? Be clear on that. SR into SH, that SR, and SR into AO, that SR is not same. In my example of labor question I showed you, SR was 120 as well as 600. So both are not same. So assuming, for example, you are using SH, then you will use SR per hour. You are using AH, again you will use SR per hour. But if you are using AO or SO to do the calculation, you cannot use SR per hour. Next point number D, SR per unit. SR per unit will be used with AO and SO. AO and SO in computation table. With AO and SO in computation table. Standard output refers to refers to the output that should have been produced for the actual time spent. Should have been produced for the actual time spent. whatever time has been spent on that, how much output should have been produced is called standard output. How much output should have been produced is called standard output. Clear? Any doubts on this? Done? Let's see this in a question first. Go through 27. Okay, let's look at this question. They've asked us to calculate variable overhead variances. I'll do both the conversion factor, that is, I'll use SR into SH as well as SR into AO. But as I start with the next set of question, we'll just do one of them. We will not try to doing both because both are not needed. So this is a variable overhead variance problem. Very simple, nothing, no adjustments will be there. Sometimes some data points could be missing, that's all. Otherwise, it's a straightforward question. We have only one scenario. Let's put the computation table. Let's start. SR into SH, SR into AH, AR into AH, or otherwise called SR into AO, or SR into SO, or AVOH. SR into SH, SR into AH, AR into AH, SR into AO, SR into SO, AVOH. In this question, I'm going to do both the calculation. That is, I'll do SR into SH as well as SR into AO. But later on, you'll understand only one of them is sufficient. Leave some 4-5 lines gap. Note 4-5 lines gap. Note any problem on variable overhead, first always try to calculate SR, and two types of SR, both you will have to calculate. So point number one, SR per hour is equal to budgeted variable overhead by budgeted hours. Look at the question if you have this data. Budgeted variable overhead by budgeted hours. Do we have this information? Can you tell me what is the budgeted variable overhead? 15,000 divided by, listen, I wanted to produce 600 units. I wanted to produce, budget is what you wanted to produce. Listen, there are three terms. Budget is what you wanted to produce, actual is what is produced, and standard is what should have been produced for the amount of time taken. Standard and budget are not same. So budget is 600, budgeted hours is 600 into 20. Standard time per unit or budgeted time per unit all are same. Per unit all are same. When I initially started with an example of budgeted cost and standard cost, you used the same per unit cost and multiplied and got me the answer. So that example is what you will have to keep in mind. So standard time per unit, budgeted time per unit, standard profit per unit, budgeted selling price per unit, standard selling at a per unit. There is no difference between standard and budget. So denominator is 600 into 20. 600 into 20. How much is the SR per hour? How much? SR per unit is equal to budgeted variable overhead by budgeted units. 26, 1.3 and 26. These two are kind of sufficient for me to do the calculation, but I want to do everything. That is, I want to do SR into SH, SR into AO. So I'm going to show you a lengthier calculation, but otherwise this 1.3 and 26 is sufficient. Using this 1.3 and 26, I'll complete the table first and then I show you the conversion factor also. I don't want you to write, listen for some time. Read the question and tell me, do you have standard hours or actual output? One of them directly in the question. Standard hours or actual output. One of them will be there. How much is the actual output? So listen for some time. 500 is the actual output. With actual output, should you use SR per unit or SR per hour? SR per unit. So I can say 26. Listen for some time. 26 into 500, first column is over. I don't need standard time also to do the calculation. But I'll show you the detailed calculation in this question, but I'm done with the first column. Between AH and SO, one of them will be readily available. See the question and tell me. Actual hours are standard output. How much is the actual hours? With 9,000, I'll have to use 1.3 SR per hour. SR per hour. AVOH will be directly available. How much is actual variable overhead given in the question? Problem is over. Problem is over because my computation table is over. But I'll show you the other calculation also. So wait for some time. I didn't want you to write. Wait for some time. This is one option where you end up writing these numbers directly. What we will do is I'll first do the other calculation also. Being the first question, I'm trying to show both. Okay. Next point number C. Standard equation. Standard equation. 1 unit is equal to 20 hours. 1 unit is equal to 20 hours. Listen, this will help me in calculating two things. Listen for some time. Actual output equal to standard time. Standard output equal to actual time. Both are interlinked. Actual output and standard time is interlinked, and standard output and actual time is interlinked. I normally write time in the left hand side, unit in the right hand side. That's your wish. Here I've written both in the left hand side. Output in the left hand side, time in the right hand side. That's your wish how you want to do. 1 unit is equal to 20 hours. What is the actual output? 500 units equal to question mark. What is the actual time? How much is the actual time? So these two question mark will give you SH and SO. These two question mark will give you SH and SO. I don't need it to solve the question, but just to show you that both are possible, I'm doing this calculation. 1 unit is equal to 20 hours. AO is equal to standard time. SO is equal to actual time, or you write the reverse, ST is equal to AO, AT is equal to SO, doesn't really matter whichever way you write it. 500 units is equal to question mark. Tell me what is that question mark is. Not 1000, 10,000. So in your first column, you can either use 500 into 26, or you can use 10,000 into 1.3. 500 into 26, which is SR per unit, or 10,000 into 1.3, which is SR per hour. Both will give you same answer. 500 into 26 or 10,000 into 1.3. Next problem onwards, I will not get into this unless needed. I will not get into this unless needed, because I have the SR into AO. Let me close it with that. If I need, I'll do it. Otherwise, I'm not going to get into this calculation. This side, what should be this question mark? You can write this in a minute. Listen. So you can say second column is 450 into 26 or 9,000 into 1.3. 450 into 26. You can say 500 into 26, 450 into 26, 10,000 into 1.3, 9,000 into 1.3. The gap is your first column and second column. That gap is the first column and second column. Be always clear. AO will give you ST, AT will give you SO. Standard output and actual time is interlinked. Actual output and standard time is interlinked. Write this first now. Then standard equation. In table we'll fill it later. First write this. Done with this calculation. 500 units is equal to 10,000 hours. 450 units is equal to 9,000 hours. 500 is AO, 10,000 is SH, 450 is SO, 9,000 is AH. Any doubts on this? Can you proceed? Now come to the table there. First column. Tell me what is SH? 1.3 into 10,000 or 26 into what is the AO? 500. First column is over 13,000. 1.3 into 10,000 or 26 into 500. In most of the question, I'll use SR into AO only. This is the pattern. I'll use this, and I'll use this because these will be readily available. These will be readily available. Second one, what is the AH? 1.3 into 9,000 or 26 into 450, 11,700. third one, I'm not going to do AR into AH. I'll tell you the challenge when I do AR into AH. What is the actual variable already given in the question? What does AR is 14,000 divided by 9,000. 14,000 divided by 9,000. And then you'll have to again multiply with 9,000. Rounding of differences will come. 14,000 if you divide by 9,000, you will, what is 14,000 divided by 9,000? So unless you write more decimals, if you write only 1.56 and do into 9,000, you will not get back 14,000. So there's no point in dividing and then again multiplying. Dividing and again multiplying is of no use. If at all the question directly gives me the AR, okay. Otherwise, why to divide and again do the multiplication? So this I'm directly writing 14,000. Any doubts till this? Okay, now listen. When I write formula, whether you do SR into SH or you do SR into AO, formula will only say SR into SH. I don't want to tell you a new formula now and all. Formula is only SR into SH. Whether you have done SR into AO calculation or SR into SH calculation doesn't really matter for me because both are same. Both are technically same. So in the formula for variances, don't say SR into AO I want to change. Then every time changing the formula you get stuck. You can change the formula if you are confident, but I don't want to get into formula changing at all. Imagine the chart. Chart said SR into SH minus SR into AH. So this is SR into SH. 26 into 500 is also SR into SH only. 26 into 500 is also SR into SH, and 1.3 into 10,000 is also SR into SH. Let's start. VOH variances. VOH cost variance equal to VOH cost variance equal to SR into SH minus AR into AH. SR into SH minus AR into AH. How much is the first column? Last column 1000 adverse. VOH expenditure variance. SR into AH minus AR into AH. SR into AH minus AR into AH. How much is SR into AH? 11 minus 2300 adverse. VOH efficiency variance. What's the formula? SR into SH minus SR into AH. What is SR into SH? 13,000 minus 11,700. 1300 favorable, 2300 adverse, and 1000 adverse. 1000 adverse, 2300 adverse, and 1300 adverse. Any doubts on this? Clear? Sorry, this last one is favorable. 1300 favorable. Others two are adverse. Any doubts on this? Can you proceed? Okay, I'll then explain fixed overhead variances. Variable overhead only one problem is sufficient. Then we'll be doing both fixed and variable together. So there again we'll do variances. Now, just give me a minute. Okay, now comes the fixed overhead variances. This alone is a challenging variance. Reason is, in a practical world, fixed overhead variances can lead to a lot of challenges for an organization. For example, Bharadwaj Institute estimated that we'll get 40 students for a batch. Assuming we got only 20 students, we are not bothered about faculty cost because it is variable in nature. Less students, less faculty cost. We are not bothered about printing and stationery cost. Less number of students, less printing and stationery. But unfortunately, examples like rent do not go down just because we got lesser students. So in fixed overhead variances, Every organization at the beginning of the year will determine SR. What is SR? Is budgeted fixed overhead by budgeted output or budgeted hours. You can say budgeted output or budgeted hours. Normally it is on, or for Bharadwaj Institute we would have done budgeted fixed overhead by budgeted students. We would have done by budgeted students. Then we get to know AR. AFOH by AO. AFOH by AO. In fixed overheads alone, I don't want this also to change. I don't want this to change. Whereas in variable overhead, material variances, labor variances, I'm least bothered whether the output changes or not. If you have planned for 10,000 units and you produce only 5,000, material variance, no problem. Because you will do the proportionate cost for 5,000 and do the variances. But in fixed overheads, the challenge, bigger challenge for an organization is, in case you produce lesser, then you are gone, because what will happen indirectly is your original plan was 2 lakh divided by 10,000 units, 20 rupees. This 2 lakh became 2 lakh 10,000. This became 5,000. 42 rupees. 42 minus 20. 22 rupees adverse variance will be there. 22 rupees adverse variance will be there. But if it was variable overhead, no. If 10,000 became 5,000, this 2 lakh would have become 1 lakh. Would have become 1 lakh. Proportionately, it would have gone down. So, first thing is, in fixed overhead, what can happen is, I want the numerator as well as the denominator to match. The numerator is expenditure, which is one part of the variance. The denominator is volume, which is another part of the variance. So here you have expenditure variance and volume variance. You do not have efficiency. In volume, why did this 10,000 become 5,000? There can be many reasons. One of them can be efficiency. One of them can be efficiency. But why did volume of 10,000 become 5,000? I'll analyze that later. But efficiency is not the main variance. It is the volume which is the main variance. I don't want the volume to be lower than what I had originally planned for. If I have planned for 5,000 units, I want 5,000. If you produce lesser, your per unit cost will indirectly go up and you will have under absorption. This 20 and 42 gap is technically under absorption. That VOH cost variance you calculated, no, that is under absorption. How much is the under or over absorption which is going to happen? Because in the last question which you did, the plan was to recover 26 per unit. The plan was to recover 26 per unit. So 26 into 500 is what you would have recovered. But in reality, you spent 14,000 on 500, which is 28. 26 vis-a-vis 28, the 2 rupees is under recovery or over recovery. That is what is going to happen. Fixed overheads, I want the numerator as well as the denominator to match. Now, when I do fixed overhead variances, my chart has a slightly different method. I was not earlier giving a chart. I've started giving this only for the last 4-5 batches. It is not going to be the normal way of chart. It is a slightly different way. So I'll first show you the chart. I have SR. I don't have AR. I don't have AR. I just have SR. I'll have AR but in a slightly different manner. Okay. This side you have SH. You have AH. SH and AH. SR, SH and AH. So SR into SH, SR into AH, and one more item comes which is called BH. BH is called budgeted hours. BH is called budgeted hours. This SH is otherwise called as AO. You need not write this. SH is otherwise called AO. BH is otherwise called as BO. The difference between this is called volume variance. The difference between the actual output and budgeted output. I wanted 40 students in the class. I've got only 20 students. That difference is volume variance. That difference is volume variance. So SR into SH, SR into AH, SR into BH, and in the outer part, I have something called as AFOH. This is nothing but AR into AH. AFOH is nothing but AR into AH, but I don't want to write it. If I write it, it will cut here. I'll not get the formula. I'll not get the formula. This chart is just a tool to get the formula. Okay. This is not that it has. If I write AR into AH, I'll have to cut it here. Then my formula will be wrong. Then my formula will be wrong. So I am writing it as AFOH in the outer part. I'm writing it as AFOH in the outer part. This outer part is called as expenditure variance. Till here, okay? The entire part here is called expenditure variance. That entire part is called expenditure variance. Be in listen mode for some time, then you will write. So the first one is called SR into SH, otherwise called as SR into AO. Second one is called SR into AH, otherwise called as SR into SO. SR into SO. Third one is called SR into BH, otherwise called as SR into BO, otherwise called as budgeted fixed overhead. Otherwise called budgeted fixed overhead. And the last one is called AFOH. What is expenditure variance? Is the difference between BFOH and AFOH. Expenditure variance is the difference between budgeted expenditure and actual expenditure. Till now I kept on saying standard minus actual, but fixed overhead this does not work, because what happens in fixed overhead is, unfortunately, expenses do not go down just because you have produced less or you have produced more. If we get 45 students, we are not going to pay extra rent. If we get 35 students, we are not going to get concession in rent. So the first part is difference in the numerator. Difference in the numerator, which is BFOH and AFOH. The difference between the numerator is called expenditure variance difference. The formula will come from the chart. Second one is difference between this AO and BO. This together is called volume. This together is called volume. SH and AH comparison is called efficiency, and this is called capacity. Efficiency, I'll give logic of the formula and all in some time. Efficiency and capacity. For the time being, you just need to tell me what is the formula using your understanding of the chart, whatever I have explained in the chart. What is the formula for efficiency variance? Only this part. SR into SH minus SR into AH. That is the only thing I want, okay? Capacity variance. SR into AH minus SR into BH. Together is called volume. Both the parts called volume. What is the formula? SR into SH minus SR into BH. The outer part is called expenditure. SR into BH minus AFOH minus AFOH. Don't call it as AR into AH, you will get confused. Minus AFOH. AR into AH is only AFOH technically, but I don't want to cut it in between. The smallest rectangle SR into SH minus the biggest one, which is AFOH, is called cost variance. That is called the cost variance. For the time being, put the chart and this computation table. Formula I'll write in some time. Put the chart, keep writing it. Just put the chart and the computation table. Don't write this even AO, BO and all here which is given. Just write this with the conversion SR into SH, otherwise called SR into AO, SR into AH, otherwise called SR into SO, BH, BO, BFOH, AFOH. Clear? Can you proceed? Any doubts? Alright. FOH cost variance is equal to FOH cost variance is equal to SR into SH minus AFOH. SR into SH minus AFOH. Smallest rectangle minus the biggest one. SR into SH minus AFOH. Split into two. FOH expenditure variance. FOH volume variance. Expenditure variance and volume variance. FOH expenditure variance and volume variance. Expenditure variance part is BFOH minus AFOH. Or don't write this way, sorry. You'll unnecessarily get confused. From the chart, SR into BH minus AFOH. SR into BH is BFOH technically. SR into BH minus AFOH. Logic is very simple. Budgeted expenditure minus actual expenditure. Difference between, below this you can just write a line of explanation for you. Difference between budgeted expenditure and actual expenditure. That is what expenditure variance is. Difference between budgeted expenditure and actual expenditure. Clear? Volume variance from the chart SR into SH minus SR into BH. The other name for this is, I'm writing the other name just to explain the concept, okay? Otherwise, don't write the other formula down. SR into AO minus SR into BO. Basically, volume means difference between actual volume and budgeted volume. Difference between the volume, difference between the expenditure. Difference between the volume, difference between the expenditure. So, volume variance is nothing but explanation for you. Difference between actual volume and budgeted volume. Difference between actual volume and budgeted volume. That gap is called as volume variance. Clear? Any doubts till this? Now, why did we produce less? Listen, two reasons can be there. Listen for some time. First reason is efficiency. In fact, there's another situation which we'll talk about. Did I give any heading for this? Okay, this is a situation one, there's a situation two, I'll give the heading later. But there can be two reasons as of now. One is laborers are not working efficiently. That is one reason. Second reason is I am underutilizing the capacity. What is underutilization of capacities? I wanted my plan that we will work for 10,000 hours. But we worked only for 8,000 hours. We worked only for 8,000 hours. The gap of 2,000 hours is not a problem in labor variance. You wanted to work for 10,000 hours, you have worked only for 8,000 hours. No worry, the 10,000, 8,000, no comparison there. Then you will say 8,000 is okay. What is standard time? You will say standard time is 8,500. So 8,500 vis-a-vis 8 comparisons the efficiency. That is what we do in labor as well as variable overhead. Fixed overhead is saying if you are wasting capacity, production will go down. If you are wasting capacity, production will go down, which will result in volume variance. So we have two reasons. One is called capacity underutilization and efficiency. Under or over 10,000 hours you wanted to work, but you work for 12,000. You work for 14,000. If you work for more hours, it is good for fixed overhead. It is good for fixed overhead because fixed overhead more hours means more production. So two reasons for this split: FOH efficiency, FOH capacity. Efficiency, same formula we have been using everywhere: SR into SH, SR into AH. No explanation for this, okay? SR into SH minus SR into AH. That is the efficiency variance part. I don't need any explanation for efficiency variance part. Capacity, SR into AH, so minus SR into BH. Formula comes from the chart. SR into AH minus SR into BH. This indicates under slash overutilization of capacity. Under slash overutilization of capacity. If your actual hours is more than budgeted hours, it is overutilization, which is a favorable variance. Overutilization is favorable, underutilization is adverse. If you are using more, it is good. Any doubts on this? This is give the heading in the top. This is situation 1. I did not give this. FOH variances where you wrote, you can just write situation 1. Without calendar variance. Without calendar variance. What is this without calendar? With calendar, I'll explain later. Without calendar variance. Situation 2. With calendar variance. With calendar variance. Okay, let's first understand what is this without calendar and with calendar part. Listen. Okay, my plan, I said volume 10,000 units was the plan. We have got only 5,000 units. First reason I lost 1,000 units. 10,000 to 5,000 gap I am trying to analyze. First reason is I lost 5,000 units because workers are inefficient. Second, there can be a calendar variance. What is calendar variances? Your plan was to work for 20 days. You worked only for 18 days. If you work for lesser number of days, it is an adverse calendar variance, because if you work for less days, less production, more volume variance, So volume has one more reason called as calendar variance. What is calendar variance? Is the difference between the number of days you wanted to work and the number of days you have actually worked. If you work for more number of days, favorable calendar variance, because the landlord will not tell us whether I am taking class for 10 days, 15 days, 20 days, 25 days, my rent is going to remain same. So if I can increase the number of classes or number of days of operation, my costing per student can go down because I can run multiple batches. Maybe I complete this batch faster and then do another batch. So my cost can go down. So if I'm able to take more number of batches in a month or more classes in a month, it is favorable for me. So calendar variance is also one more reason for your volume variance. For your volume variance. Now put the chart. SR, SH, AH, PH and BH. What is this PH and all? I'll explain later. PH is possible hours. The full name is possible hours. Basically, between AH and BH, I've added one more item called possible hours. Between AH and BH. So, link SR into SH, otherwise called SR into AO, SR into AH, otherwise called SR into SO, SR into PH. PH is possible hours. S into PO. PO is possible output. R PFOH. Three names are there for this. SR into PH, SR into PO, RPFOH. Last one SR into BH, SR into BO, RBFOH, and the outer part is called AFOH. The outer part is called AFOH. What is pH and all? Explanation will come to in some time. This AFOH alone, I'll have to write it like this. I can add it AF into AH, but then it will complicate the chart. Outer part is called expenditure. Expenditure. All three put together is called volume. Expenditure. All three put together is called volume. Breakup is efficiency. Capacity. Calendar. What is this calendar and all? I'll explain later. Efficiency, capacity, and calendar. The only thing you need to tell me is looking at the chart, tell me the formula. What is FOH calendar variance formula? SR into PH minus SR into BH. That is alone is sufficient for me. Okay. What is capacity variance formula? SR into AH minus SR into PH. The formula is different. Earlier there was a different formula. This is a different formula. Okay. Efficiency. SR into AH. Volume. SR into SH minus SR into BH. Expenditure. SR into BH minus AFOH. Clear? Any doubts on this? You have written till this. Now below this, right? FOH cost variance. I'll not give any logic for the formula now. I will just write the formula. SR into SH minus AFOH. Expenditure, volume, expenditure and volume. Every formula is going to come from the chart only. What is the formula for expenditure variance from the chart? SR into BH minus AFOH. Volume from the chart. SR into SH minus SR into BH. Efficiency, capacity, calendar. The name will be FOH efficiency variance, FOH capacity variance, FOH calendar variance. That's how you'll name it. Efficiency, capacity, and calendar. Efficiency, capacity, and calendar. How much the efficiency variance? Sir, what is the formula for efficiency variance? Capacity, calendar, complete writing the formula. Okay, now write note. The first two notes are same. SR per hour is equal to budgeted fixed overhead. SR per unit is budgeted fixed overhead. Earlier you wrote budgeted variable overhead. Now budgeted fixed overhead. SR per hour, SR per unit. SR per hour, SR per unit. Point number C. Calendar variance, calendar variance, calendar variance will be applicable, will be applicable only if, only if, only if we have information, only if we have information, information on budgeted days and actual days. What is this again when I do a problem only? On budgeted days and actual days. Only if we have information on budgeted days and actual days. Point number D. PH in bracket possible hours, comma PO possible output, PFOH possible fixed overhead, possible hours, possible output, possible fixed overhead, possible fixed overhead is computed is computed with the help of is computed with the help of actual days worked. How is this done? You will understand in a problem. Is computed with actual days worked. Clear? Okay. Let's take a break of 10 minutes and then resume. Okay, let's proceed now. I'll explain this pH concept alone with a problem. So let's look at question now. Come to question 28. Budgeted data, actual data, calculate fixed overhead variances. So the data has been given in the question. We'll have to calculate fixed overhead variances. Nothing much for you to see in the question. First thing we need to check is, do we have budgeted days as well as actual days in the question? Is the budgeted number of days given in the question? Actual days. So calendar variance is applicable. Calendar variance is applicable if both are there in the question. I'll not be, for example, SR into SH or SR into AO, only one I'll use. I'll not try to do both now onwards, because the conversion factor I've already explained the logic in one question. So if needed, we'll just calculate one of them. In some question, only one will be possible. So there we will see what needs to be done. Let's start. First, do the chart. SR, SH, AH, PH, and BH, and the outer column is AFOH. Outer part is called expenditure variance. Three put together is volume, efficiency, capacity, calendar. Efficiency, capacity, and calendar. Put together is volume variance. Okay, let's do the computation table below this now. SR into SH, will write all the conversion factor, but use only one of them. I'm not going to use all. SR into SH, or SR into AO, SR into AH, or SR into SO, PH, PO, PFOH, BH, BO, BFOH, and AFOH. SR into SH, or SR into AO, SR into AH, or SR into SO, SR into PH, or SR into PO or PFOH, SR into BH, or SR into BO or BFOH, AFOH. 5 line items will be there. This is a question with calendar variance. So a problem can be with calendar, a problem can be without calendar variance. Accordingly, you have to do the table. Any doubts on this? Can we proceed? Note. First thing, we'll always try to do SR calculation. SR per hour is equal to Budgeted fixed overhead by budgeted hours. Budgeted fixed overhead by budgeted hours. SR per hour is equal to budgeted fixed overhead by budgeted hours. Budgeted fixed overhead by budgeted hours. What's the budgeted fixed overhead? 1000. Budgeted hours 0.50 per hour. SR per hour is 0.50 per hour. 0.50 per hour. SR per unit. BFOH by budgeted output. 1200 by what's the budgeted output? 1500. 0.80 per unit. Always SR per hour and SR per unit is the first computation. 0.50 and 0.80. 0.50 per hour, 0.80 per unit. Any doubts on this? SR per hour, SR per unit. Data, the fixed overhead part variance calculation all is very simple. Just that the formula sometimes students confuse themselves. That is where the chart came into picture. Using the chart, you should be in a position to do it faster and in an easy manner. Any doubts to this? Then point number C, computation of PFOH. Computation of PFOH. PFOH. PFOH is applicable only if you have budgeted days and actual days. How many budgeted days was given in the question? Listen, 25 days is equal to 1000 to, listen for some time, 1200. In 1200, you need not write this fully. I'm just trying to explain it. Listen for some time. 25 days is equal to 1200 rupees. Or in 25 days, how many units you wanted to produce? 1000. How many hours you wanted to work? And what is the budgeted overhead number? Fixed overhead number 1000. This was the plan. In 25 days, produce 1500 units and work for 2400 hours and have an overhead expenditure of 1200. How many days did we actually work? If 25 is equal to 1500, what is 27? If 25 equal to 1500, what is 27? If 25 is equal to 2400 hours, what is 27? If 25 equal to 2400 hours, what is 27? If 25 is equal to rupees 1200, what is 27? Now listen, I am not going to tell you to write everything. Listen, that 1620 is called possible output. What is possible output? Is you budgeted 1500 units, assuming you will work for 25 days. But because you work for more days, the possible output increases. This possible output will be compared with something else to understand capacity underutilization or overutilization. Or you can say in 25 days you wanted to work for 2400 hours. In 27 days you can work for 2592 hours possible hours. In 25 days your overhead expenditure is 1200. Expenditure does not increase, but this is a concept of absorption. You will absorb more if you are working for more number of days, producing more. Now listen, you need not write for the time being. This third column I can say 0.50 into, sorry, not 0.50, 0.80 into 1620 units. 0.80, what is 0.80? Is SR per unit into, sorry, okay, first SR per hour, 0.50 into 2592, SR into PH. SR into PH. What is SR into PH? Is 0.5 per hour into 2592, or you can say 0.8 per unit into 1620 units, or directly 1296. I'm going to directly write 1296. I'm going to directly write 1296. SR into PH is zero point 0.5 per hour into 2592. What is 2592? What you calculated? Or 0.8 into 1620. 0.8 into 1620, how much you get? Or directly 1296. Now when you do PFOH, I don't want all this. If you do all this in between, you will get possible hours, possible output. If you do the in between one, it's called possible hours and possible output. What you will do is this: 25 days equal to 1200, 27 days equal to question mark. What is 27 days? That is PFOH directly. Somebody wants to do possible hours, please do it. Somebody wants to do possible output, please do it. Nothing wrong in doing that. Then you will have to multiply either with 0.5 or 0.8. You will get the same answer. You're going to get the same answer. Now write PFOH. 25 days equal to 1200. 27 days equal to question mark. What do you get for 27 days? Rupees 1296. Any doubts on this? Clear? Problem will be almost over once these three are calculated in most of the question. Okay, in most of the question, the problem will be almost over once these three are calculated. Any doubts till this? I'll go up. If I need something else, I'll do. Between SH and AO, one of them will be readily available. See the question and tell me, between SH and AO, how much is the AO? With AO, should you use zero point 0.5 or zero point 0.8? The first column is 0.8 into 1600. 0.8 into 1600. You said AO is available. I've taken that. Between AH and SO, one of them will be available. How much is AH? 2000. With 2500, 0.5 or 0.8? 0.5. PFOH you have calculated. How much? SR into BH or SR into BO or BFOH. One of them will be readily available, which is BFOH. How much is BFOH? 1000. AFOH will be readily available. That's all. The table is over. The table is over because we have most of them readily available, and that is how it will be in most of the question. Most of the question, these items will be directly available. Any doubts till this? Any doubts? So first column is, now do the multiplication. 0.8 into 1600, 1280, 0.5 into 2500, 1200, 1300. Any doubts till this? Clear? Now let's calculate. FOH cost variance is equal to, you will have to look at the chart if you don't remember the formula. Please look at the chart for the first question. FOH cost variance is, what is the formula? SR into SH. Whether you have done SR into AO or SR into SH doesn't matter. Don't change the formula and all. SR into SH minus AFOH. What is SR into SH? AFOH 20 adverse. Then FOH expenditure variance. Look at the chart and tell me the formula. SR into BH minus AFOH. 1200 minus 1300. 100 adverse. FOH expenditure 100 adverse. Formula has to come from the chart only. FOH expenditure 100 adverse. What's the next formula? FOH volume variance from the chart. SR into SH minus SR into BH. 1280 minus 1200. 80 favorable. Volume is 80 favorable. Clear? This is split into FOH efficiency variance. Tell me the formula from the chart. SR into SH minus AH. 1280 minus 1250. 30 favorable. FOH efficiency is done. Next one is capacity variance. Listen, now for capacity we are comparing actual hours with possible hours, because budget was assuming less days of working. Now it is more possible. So capacity is SR into AH minus SR into PH. 1250 minus 1296. 46 adverse. And FOH calendar. Was the formula for calendar? SR into PH minus SR into BH. 1296 minus 1296 favorable. Calculation, everything is going to be fairly simple, just that you will have to remember the chart. Any doubts on this? 20 adverse, 100 adverse, 80 favorable. 100 plus 80, that 100 adverse plus 80 favorable is 20 adverse. 80 favorable is 30 favorable plus 46 adverse plus 96 favorable. All put together is that 80 favorable number. Any doubts? Is there a doubt? Efficiency variance? SH and AH. Now tell me, what's the confusion? What is the formula for efficiency in labor? Standard time by actual time. So comparing standard time and actual time is efficiency variance. If you are less efficient, you will produce less units. If you produce less units, volume variance will be impacted. So it is a sub-component of volume variance. So if workers are not efficient, for example, I took classes for all 30 days, but I did not take any proper classes, or I did not complete any chapter. So my rent cost is incurred, but there's no output which has come. So unfortunately, this cost is an extra cost for Bharadwaj Institute, because if you are inefficient, it will lead to volume variance. It will lead to volume. We wanted to complete your batch in 3 months. I am coming to the class every day, but we completed in 5 months. So extra 2 months of rent we have to incur. Extra 2 months of rent we'll have to incur because of my inefficiency. So efficiency is a subpart of volume variance. Any doubts on this? Clear? So efficiency is a subpart. Capacity is also a subpart, because if you don't utilize the capacity fully, it will lead to volume variance. And calendar is also a subpart. If you work for more days or less days, both can lead to volume. Basic thing is, you wanted to produce 10,000 units, you have produced only 5,000. What can be the reason? Inefficiency can be a reason. Underutilization of capacity can be a reason. Underutilization of days or time can be a reason. Clear? Any doubts on this? 29 is homework. Go through 30. Okay, nothing much in the question. Straightforward direct data is given. It is basically asking us to calculate overhead variances. Fixed is also to be done, variable is also to be done. Both are required to be done. Why both are required? Because there is data on variable, there is also data on fixed. So first we will do variable overhead where you don't have multiple scenarios and all. In fixed we have two situations, one with calendar and one without calendar. In variable all that issues are not there. Let's start with the chart for variable overhead. SR, our table directly, SR into SH, R SR into AO, SR into AH, R SR into SO, AR into AH, R AVOH, SR into SH or SR into AO, SR into AH or SR into SO, AR into AH or AVOH. Just to revise variable overhead again, leave some 3 lines gap. Note SR per hour is equal to, listen, we'll be doing SR per hour for fixed overhead separately, variable overhead separately. SR per hour is equal to budgeted variable overhead by budgeted hours. Budgeted variable overhead by budgeted hours. Tell me from the question. 12,000, 2 per hour. SR per unit is equal to budgeted variable overhead by budgeted output. How much is the output? 12,000 output. That's all. Problem will be almost over once these two are done. 2 per hour and 1 per unit. 2 per hour, 1 per unit. 2 rupees per hour is the standard rate and 1 rupee per unit is the standard rate. Clear? Now, between SH and AO, one of them will be readily available. How much is AO? What should I use? 2 rupees or 1 rupee with this? Which one? SR per unit. SR per unit. 1 into 13,000. Between AH and SO, one of them will be readily available. AH, how much? Which one should I use? 2 into 6,600. AVOH should be readily available. How much? Calculate the variances. I'll be back in a minute. You start calculating the variances. VOH cost variance is 300 adverse, expenditure is 100 adverse, and efficiency is 200 adverse. These should be the answers. 200 adverse for efficiency, expenditure is 100 adverse, and cost is 300 adverse. Any doubts on this? Can you proceed? Any doubts on this part? Done? Okay, I'll move to the fixed overhead part. Any doubts? Fixed overheads, we'll do it with the chart so that it's easier for you to remember the formula. Do you have data on actual days and budgeted days in the question? So it is with calendar. Then it is with calendar. So in this side, SR, SH, AH, PH, BH. Okay. So live online friends, I'm connected again. In between, I got disconnected. You're able to see the screen. Please confirm you're able to see the screen. Okay. We just started with the chart for fixed overhead. SR into SH, SR into AH, SR into PH, SR into BH. In the top, you have AFOH. SR into SH, SR into AH, SR into PH, SR into BH, and AFOH. The outer part is called expenditure. Together is called volume, efficiency, capacity, and calendar. Efficiency, capacity, and calendar. We'll write it as SR into SH, R SR into AO, SR into AH, R SR into SO, SR into PH, R SR into PO, R FOH, SR into BH, R SR into BO, R BFOH, and last column is AFOH. All this I'm just copy pasting from the chart. I've not even done anything from the question, just copy pasted from the chart. SR into SH or SR into AO, SR into AH or SR into SO, SR into PH or SR into PO or PFOH, SR into BH or SR into BO or BFOH, and last column is AFOH. Clear? Leave some 3, 4 lines. Any doubts on the chart? SR per unit, 3 items we'll calculate first. SR per unit is equal to budgeted fixed overhead by budgeted output. Earlier we did variable overhead. Now fixed overhead by budgeted output. How much is the budgeted fixed overhead? 2000. Output 12,000. 0.20 per unit. 0.20 per unit. SR per unit 2400 by 12,000. 0.20 per unit. SR per unit 2400 by 12,000. SR per hour, BFOH by BH. How much is the BFOH is same 2400, BH 6000, 0.40 per hour, 0.20 per unit, 0.40 per hour, 20 per unit and 40 per hour. Any doubts? Then the third one, PFOH computation. PFOH computation. PFOH computation. How many days is equal to how many rupees? How many days equal to how many rupees? Sorry, 50 days is equal to, you can do this for units also, hours also, or directly rupees itself. 50 units is 50 days is equal to 2400. How many actual days are there? 54 days equal to question mark. 54 days how much? 25. Problem should be almost over with this. 54 days is equal to 2592. 0.20 per unit, 0.40 per hour, and 2592 rupees. That is the possible fixed over it. Any doubts on this? Can you proceed? 0.2, 0.4 and 2592. Between SH and AO, one of them is there in the question. How much? 13? 0.2 or 0.4? What should I multiply? 0.2 into 13,000. 0.2 into 13,000. Between AH and SO, one of them will be there. How much? 0.4 into 6,600. P of which you have calculated. B of which is there in the question. A of which is there in the question. 2000. So we have picked this specific item. I have not tried doing SR into SH in this question. Can I do it? Yes, it is possible, but I am not even getting into SR into SH or SR into SO. Both we are not getting into it. And wait for some time. Any doubts till this? Okay. Very rare scenario. Some question will use the word standard here, but that does not mean standard. That is budget only. They'll use the word standard. They'll say 12,000. That is not standard output. That is budgeted output only. That is budgeted output only. They'll say 6,000. That is not standard hours. That is budgeted hours. They'll say 2,400. That is not standard fixed over it. That is budgeted fixed over it. This is 12,000. That is not standard variable over it. That is budgeted variable over it. I'll show you such a question. Just give me a minute. Here the word standard is used. That is not standard output, that is not standard working days, that is not standard fixed overhead. The solution has interpreted this only to be the budgeted. The term standard has been interpreted as budgeted, because some students interpreted it the other way around and tried doing it, will not work. If they give standard directly, it means it's budget. All the item, if they give you all the items directly, then that is only budget and not standard. Any doubts till this? So I am done with the table. I'll give you some 3-4 minutes. Complete the variances. 2600, 2640, 2592, 2400, 2500. Please apply the formula. apply formula and close this. If you have a doubt on the formula, go through the chart. FOH cost variance is 100 favorable. All done with the variance calculation. Can I start discussing the answer? FOH cost is 100 favorable. Expenditure is 100 adverse. Volume is 200 favorable. Efficiency 40 adverse. Capacity is 48 favorable. Calendar is 192 favorable. Calendar is 192 favorable. Any doubts on this? Any doubts on the variances? Maybe the summary is here again. Anyway, looking at the numbers I've told you, but this is the summary. Cost is 100 favorable, expenditure 100 adverse, volume 200 favorable, efficiency 40 adverse, capacity 48 favorable, calendar 192 favorable. Clear? Any doubts on this? Can you proceed? Go through 31. Okay, this fixed overhead variances we calculate, sometimes it can also be expressed as a ratio. What is ratio? Is expressed as a percentage. Variance is expressed in rupee terms, ratios are expressed in percentage. Now ratios are very simple. If I come here, we have three ratio: efficiency ratio, capacity ratio, and calendar ratio. What is efficiency ratio? Is SH divided by AH. SH divided by AH. No rate and all. You will not bring any rate into picture. What is capacity ratio? AH divided by PH. AH divided by PH. What is calendar ratio? PH divided by BH. What is volume ratio? All three put together is called volume, which is SH divided by BH. SH divided by BH. We do not have expenditure ratio. No. We do not have expenditure. This is if you have calendar. If you don't have calendar, then the formula will come from here. SH by AH is called efficiency. AH by BH is called capacity, and together is called volume. And calendar will come if you have actual days as well as budgeted days. If you have that, calendar will come into picture. If you do not have, it is without calendar ratio. It is called ratio, not variance. So now what you will do, when you do a table, we will write only SH, AH, BH, no into SR and all, no into SR. The same chart only will help you in getting to the answer, but this SR and all is not needed. SR and all is not needed. SH, AH, BH. In place of SH, you cannot write AO and all. That conversion and all will not work. If you are writing in place of SH, AO, then in place of AH, you will need SO. So it's either SH by AH. If you remember, in labor chapter, efficiency ratio was standard time by actual time, or actual output by standard output. Actual output by standard output. That formula is coming from here. That formula is coming from the chart. This chart is only giving that formula. In this question, do you have actual days as well as budgeted days? Both are there. What is the actual days? 22. Budgeted days? 20. Both are available. Calendar ratio is possible. Calendar ratio is, in fact, in the question, I think I missed adding, calculate capacity, activity, comma, calendar and efficiency. Calendar is also to be calculated. Calendar is also required to be calculated. Calendar also needs to be done. So this is with calendar variance or with calendar ratio. I will be putting the chart, but I'll not write SR and all. I'll not be writing SR and all. So let's put the chart which is with calendar. With calendar, let's put the chart first. SR, this side, SH, AH, PH, BH, I'm not writing anything beyond this, okay? I don't want the AFOH part and all. I don't want the AFOH part and all. It doesn't serve any purpose here because we do not have an for expenditure. I cannot calculate a ratio. So this is called efficiency, capacity, calendar, and together is called volume. Other name is activity. The other name for volume is activity. The other name for volume is activity. We are not even going to write SR, okay? I am not going to write SR also in the table. It doesn't serve any purpose. It is volume is otherwise called as activity. What is the formula for efficiency? Look at here and tell me. Efficiency. No, no SR, no SR, no SR. I don't want any SR. SH, it is division, not minus, okay? SH by AH into 100. SH by AH into 100. Capacity. AH by PH into 100. Calendar. PH by BH into 100. Volume. SH by BH into 100. We are going to do in percentage terms, so into 100, and we have to divide. No minus, no concept of minus ratio is division. Clear? Let's do the table now. Computation table will have SH, AH, PH and BH. This is what will come in the computation table. SH, AH, PH and BH. Standard hours will be calculated with help of actual output. Now let's read the question. Question says a company produces two products X and Y. Product X, the standard equation is 8 hours equal to 1 unit. Product X, 8 hours equal to 1 unit. Product Y, 12 hours equal to 1 unit. In April of 22 working days of 8 hours a day, 1200 units of X and 800 units of Y are produced. So now it's standard time. 1200 of X, 1200 of standard time is always calculated with the help of actual output. 1200 of X, what is the time required per unit? 1200 into 8 plus we have produced X as well as Y. 1200 into 8 plus second product, how many units? 800 into 12. Put together how much? 1200 into 8 plus 800 into 12. Any doubts on this? Coming to actual hours, read and let me know the actual hours. How many actual hours have we worked? I want hours, not the days. So tell me the actual hours. How much? It is 22 days into 8 hours per day into number of workers, man hours. The concept is always man hours. So 22 into 8 into how many people? 17,600. 22 into 8 into 100. I'll come to possible hours in a minute. I'll come to possible hours in a minute. We'll write that later. Possible hours, we'll write it later because I have to form an equation for that. What is budgeted hours? How much is the budgeted hours? Read question carefully. Read question carefully. 1,86,000 is for a year. We are doing calculation for 1 month. We are doing calculation for a single month. So 1,86,000 by 12. Any doubts till this? 15,500. 1,86,000 divided by 12. 15,500. Now come down. Computation of pH. Computation of pH. It is like PFOH calculation. pH is like PFOH calculation. Earlier you were saying 20 days equal to so many rupees. There's no rupee calculation here. No rupee calculation. How many days was the plan? How many days we wanted to work? 20 days equal to 15,500 hours. 20 days equal to 15,500 hours. How many days have we worked? 22 days equal to question mark. $17,000. Any doubts on this? Now various formulae will come from the chart. We are going to take all the formulae from the chart and then start doing the calculation. Any doubts till this? Now write efficiency ratio is equal to efficiency ratio is equal to, look at the chart, standard, guys please participate, standard hours by actual hours into 100. This is what you were normally doing even in labor chapter. How much the standard hours? We have done the calculation. Actual hours into 100. 109.09%. 109.09%. 109.09%. Any doubts on this? What's the next one? Capacity ratio is equal to actual hours by what? Possible hours. Listen, the formula can be different if you have without calendar. That is why you will have to put the chart, and if it's without calendar, it's actual by budgeted hours. There, the capacity ratio is also different, capacity variance is also different. 17,600 by what are the possible hours? 17,000 into 100. 103.23%. Calendar ratio. Calendar ratio is equal to, formula is possible hours by budgeted hours. Possible hours by budgeted hours. 17,050 divided by into 100. 110%. Activity ratio, that is nothing but the volume ratio. The other name for volume is activity. Activity ratio is equal to standard hours divided by budgeted hours. 19,200 divided by 15,500 into 100. 1 123.87%. Any doubts on this? Okay, the question has asked calculate this and establish the interrelationship. What is interrelationship? Is volume variance is the sum of the three. Volume variance is the sum of efficiency, capacity, and calendar. These are percentages, you cannot add them. When you multiply the three in the calculator, do 109.09 into 103.23%, put the percent button, okay? 109.09, initially don't put, start with 109.09 into 103.23 percentage into 110 percentage. What number you get? 123.87. That is, when you multiply these three percentages, you will get 123.87 percentage. So the interrelationship is right. Activity ratio is equal to efficiency ratio into capacity ratio into calendar ratio. Activity ratio is equal to efficiency, capacity, and calendar. Multiply the three. 109.09% into 103.23% into 110%. You get 123.87%. That's the interrelationship. Any doubts on this? Can you proceed? Any doubts on this? Done? Go through 32. Okay. This is a reverse working problem because some data has been given in the question. Some data needs to be computed by us. Some variance information is already there, like cost variance is there, volume variance is there, and some missing information is there. First thing we need to decide whether it is a variable overhead variance or fixed overhead variance or overall variance. It can be both put together also. Is it fixed overhead, variable overhead? What is your sense? It's one of them. It's not both together. Is it fixed or variable? Why fixed? Yeah, because volume variance is given in the question, I am taking it to be a fixed overhead variance because volume variance is there only for fixed overhead. It is not there for variable overhead. One of the requirement of the question is overhead capacity variance, which is also there only in fixed overheads. You do not have that in variable overhead. Second, do you have actual days and budgeted days in the question? Whatever data given, do you have actual days and budgeted days? Is calendar variance required in the question in any of the requirements? No, then it is FOH variances without calendar. FOH variances without calendar variance. Clear? Any doubts on this? Why FOH? Because volume variance word is there in the question. Why without calendar? Because I don't see actual days and budgeted days, and it's also not one of the requirement of the question. It is also not there in the requirement. It could be that it is there in the requirement, then some hidden information I have to find, but not there even in the requirement. So this is a problem without calendar. Let's put the chart. Put the chart for without calendar. SR, SH, AH, BH. No PH in between. Any doubts on the chart? Chart should be clear to you by now. You should be in a position to. That's where I want you to revise the charts part alone. Charts is something you should keep revising so that you get clarity. Because many students find it difficult to remember the formula. I don't want you to remember any formula. Go through the chart. Chart will automatically tell you the formula. When we start, computation table SR into SH or SR into AO, SR into AH, R SR into SO, SR into BH, R SR into BO, R BFOH, and AFOH. SR into SH or SR into AO, SR into AH or SR into SO, SR into BH, R SR into BO, R BFOH, R AFOH. We'll first try to get SR per unit and SR per hour and then see what can be done. Any doubts on the table? Till now, nothing I have taken from the question. Leave some 4 lines, note 1. Objectives to somehow complete the table. SR per hour is equal to BFOH by BH. Budgeted fixed overhead by budgeted hours. Budgeted fixed overhead by budgeted hours. Budgeted fixed overhead by budgeted hours. How much is the budgeted fixed overhead? 6,000. Budgeted hours? 1,000. 5 per hour. 6,000 by 1,200. 5 per hour. Any doubts? Second thing, what we calculate? SR per unit, but you will get stuck. Budgeted fixed overhead is there. Do you have budgeted units? No. So we'll see what to be done. I cannot write that as of now. I cannot write that as of now. I have SR per hour. I don't have SR per unit. We'll see how do we get that. Now, in the question, I am not sure what I'm going to use also. Whether I'm going to use SR into SH or SR into AO, I don't know that because both are not there in the question. SH is also not there. AO is also not there. And in SR, I have 5 rupees, but I don't know the SR per unit. So I'm leaving it for the time being. Second one, SR into AH or SR into SO. Do you have AH or SO in the question? Do you have AH or SO in the question? Leave it. This item is there. How much is BFOH? 6,000. I don't know the AFOH also. I don't know the AFOH also. Only thing I have is this. Tell me which variance links BFOH and any other item. Some variances are given in the question. They have given cost variance, volume variance. Expenditure is not given. What is given in the question? C. Cost variance and volume variance. In cost variance or volume variance formula will BFOH come? In which one BFOH will come? What is the formula for cost variance? SR into SH minus AFOH. Both are not there. Let's leave it. Volume variance, what is the formula? Okay, let's use that then. Let's use volume variance. Point number 2. FOH volume variance is equal to SR into SH minus BFOH minus BFOH. How much is the volume variance? 1,000 minus 1,000 is equal to SR into SH minus 6,000. Tell me what is SR into SH? How much is SR into SH? Let's write that in the first column. 5,000 SR into SH is 5,000. Any doubts? Clear? Can you proceed? So I write this 5,000 and break it as 5 into 1,000. What is 5 is standard rate per hour. I'm using the standard rate per hour. I don't know the standard rate per unit. We'll see. In this question, SR per unit is not possible itself. You will know in this in the end. 5,000 is split as 5 into 1,000. Any doubts on this? So I have used SR into SH here. We normally use SR into AO, but I've used SR into SH First is I want to complete the computation table. Now use the cost variance, you will get this one. Now use the cost variance. Now use FOH cost variance and tell me AFOH. FOH cost variance can be used now. Earlier you could not use because column 1 was not there. $6,000. FOH cost variance is equal to SR into SH minus AFOH minus how much was the variance? Minus 1400. Minus 1400 is equal to 5000 minus AFOH. AFOH is 6400. Any doubts on this? AFOH is 6400. Any doubts? Now we are almost done. I'm yet to get that second column. I'm yet to get the second column. There is one information in the question which is going to help. What is the information there in the question? I've used point number 1, I've used point 2, point 3, point 4. What is the last information? Actual rate of recovery. Listen, AFOH is nothing but AR into AH. We have never used it anywhere. Listen for some time. AR into AH. What is the actual rate they have mentioned? 8 per hour. So 8 into 800. 800 comes here. 5 into 800. SR into AH. SR into AH. 8 into 800. I take that 800 to the second column. 5 into 800. I get 4000. Once I get the computation table, getting the missing information is just a formality. Whatever they have asked, I can keep calculating. Listen, AFOH is nothing but AR into AH. AR into AH. I have never used it anywhere because I never felt the need to use it. Because to calculate AR, first I have to divide and then do multiplication. I never wanted to get into that, but in this question, AR is given, AH become a balancing figure. Copy paste the AH. In short, in this question, SR per unit is not possible and not required also. Not possible and not required as well because I'm using SR into AH, SR into SH. Clear? Any doubts on this? Complete the table first. 8 into 800 and you get 5 into 800. Last column is 8 into 800. Second column is 5 into 800. Clear? Can you proceed? Now let's look at the requirement. Let's start. Overhead expenditure variance equal to fixed overhead expenditure, or let's use the word name whatever they've given. Overhead expenditure variance is equal to overhead expenditure variance is equal to what's the formula? SR into BH minus AFOH. SR into BH minus AFOH. Overhead expenditure variance equal to SR into BH minus AFOH. How much is SR into BH? AFOH 400 adverse. 400 adverse. Once the table is done, balance is just a formality. You have already done the table. We'll just keep copy pasting numbers from there. What's the next item? Actual overheads incurred, already calculated. Actual overheads incurred. How much? 6400 AFOH. Actual overheads incurred 6,400. That is already calculated by us. We just need to copy paste. What's the next item? That is also already calculated. How much is the actual hours worked? 8? 800 hours. Actual hours worked is 800. What's the next item? Overhead capacity variance. Look at the chart and tell me the formula. Formula is different here. There's no PH here. SR into AH minus SR into BH. When you have calendar, this becomes SR into PH. So that is why you'll have to be little cautious. How much is SR into AH? SR into BH? 2000 adverse. 2000 adverse. Next item is overhead efficiency variance, which is SR into SH minus SR into AH. SR into SH minus SR into AH. What is SR into SH? 4000. Sorry, 5000 minus 4000. 1000 favorable. 1000 favorable. Any doubts on this? Last item, standard hours to be worked. We have already calculated this. Once the computation table is done, all things will automatically come from the table. Any doubts on this? Clear? Done? Okay. I'll just let you know if any homework is there. Okay. I'll discuss these questions later in next session. There are some homework, but I have to discuss few more questions. So I'll end with this then.